Today, we will talk about mastering the basics of money management. So before we get started, make sure to hit that like button, also subscribe to my channel. Managing a business is no small feat, as it requires an adept understanding of financial systems and processes. Knowing the basics of business finance management can feel overwhelming to many business owners, but it's essential for the success of any business. From budgeting to forecasting, mastering the fundamentals of business finance is necessary. Good business financial management is essential for positioning a business for success. Without careful and responsible fiscal control, businesses often find themselves in trouble and heading toward bankruptcy. Ensuring that expenses are tracked, overspending is avoided, and income is effectively managed allows companies to increase their profits and allow for future growth. By adhering to best practices in financial management, such as cash flow forecasts, company owners can ensure that their firm remains solvent and thriving despite changing economic conditions. Sound financial management helps minimize risk, maximize profits, enhance decision-making capabilities, create financial independence, provide assets for emergencies, and drive long-term sustainable growth. It is easy to see why it is so important in business. Financial independence is a gift, and it's best experienced when it's earned. It may seem like a confusing time right now, one with all the new things you're experiencing. But one way to really get steady on your feet is to start focusing on your finances. Financial planning in your 20s is about mastering the basics. You've got to understand everything it takes to meet your expenses and have your household and daily life running smoothly. However, it's really not as complicated as it sounds. At this point in your life, you have the greatest advantage of time and support, which means you can slip and slide a fair bit before you finally carve out a financial path that works for you. If you're just starting out and are not sure where to begin when it comes to financial planning, here are some simple and effective tips to get you started. 1. Understand your cash flow. Rule number 1. Look into, understand, and analyze your cash flow. You're no longer at that point in your life where you can spend without a second thought. You may now have bills, expenses, and salaries to work through, but you don't have to let it overwhelm you. Sit yourself down and understand how much you need to spend for necessities and how many expenses you can now start to forego. This is where budgeting comes into play. To budget means to keep track of your expenses, curb your spending unless required, and stay in the pink of financial health. Learn to record your expenses every month so you know exactly where all your hard-earned money is going. Learning how to budget is a life skill, and once you learn it, it's also quite fun. 2. Start saving. Your savings are what can pull you out of sticky situations in the future. To be financially healthy means to be future-ready, so start early. Put aside a certain amount every month, cut down on impulse spends, start an emergency fund, and identify ways to remain debt-free for as long as possible. To help you along, set up a savings account with a bank and opt for an automatic transfer into the account every month. When you won't be able to see the money, it'll stay safe for when you need it in the future. 3. Identify long-term goals. This is one of the most important steps because it helps you identify how much money you need to achieve your financial goals in the future. Whether it's buying your first home, getting married, and starting a family, buying your own car, or traveling the world, think openly and honestly about your dreams and budget accordingly. It's also vital to start saving up for retirement. It does seem too far in the future, but building a fund takes time, and if you start soon, it'll save you a lot of burden and stress in the future, when more pressing expenses may prevent you from doing so. 4. Expand your earning potential. Your 20s are when you're charged and raring to go, and it's best to tap into this vitality. Look for opportunities to improve your earning capacity. You could take on part-time jobs based on your skills or take short-term study courses to explore new avenues, and maybe even become qualified for jobs that pay more. Take every chance you get to network and expand your professional circle and advance your career quickly. Remember, learning never stops, and your growth shouldn't either. 5. Be organized. Bank accounts, credit card statements, investment portfolios, leases, bills, etc. All of it comes with heady documentation that you need to understand and keep track of. Step out from under your parents' shadow and develop an organized way to keep track of your documentation and consequently, your finances. Do your best to manage things on your own, but don't be afraid to ask friends and family for help when you're stuck. This is your time to learn and grow, and making mistakes is part of the deal. Learn from early stumbles, and you'll save yourself a lot of financial grief when you're older. Financial management is something you learn over time, and you can get better at it if you stay focused. Take every chance you get to learn about new financial terms, brushing up your basics and market trends. Staying at the top of your financial game is one of the best ways to grow your money in the future. 6. Build your savings. Among the key components of any money management plan is establishing savings goals and then working to meet them. While not everyone has extra money to allocate for future use, most financial professionals would urge you to start saving as soon as possible, even if you can only afford to set aside a small fraction of your income. Whether you're saving for short-term goals such as an emergency fund, big purchases such as buying a home, or long-term goals such as retirement, there are several effective savings vehicles to consider. 7. Start setting future financial goals. Once you have a clear picture of your finances, the next step is to think about the future. What are your financial ambitions moving forward? Are you planning to buy a home, start your own business, or pay for a child's college education? Do you want to travel extensively at some point? When would you like to retire? And what type of lifestyle do you want during retirement? While nobody can predict the future or the twists and turns that lie ahead, it's important to have an idea of where you'd like to go before devising a plan to get there. 8. Establish your credit or boost your score. Establishing credit is crucial for achieving financial stability and unlocking opportunities both now and in the future. An established credit history and a decent credit score demonstrate financial responsibility and can make it easier to qualify for loans, mortgages, or credit cards and help you secure more favorable interest rates. A good credit score may even help lower car and other insurance premiums and increase your chances of securing employment. 9. Create a realistic budget for today and tomorrow. Now that you have a clear picture of your current financial needs and future financial objectives, the next step is to create a budget that can help you meet both. Creating a personal budget plan that covers current expenses while allowing for savings toward future goals can provide financial stability and peace of mind. 10. Avoid debt. While taking loans to achieve your life goals is a common way, they do come with a fair share of problems. The high interest can eat into your savings. Taking on multiple loans also affects your credit score, thereby making it harder for you to avail credit when absolutely necessary, or in some cases, even a job. So, try to limit your debt as much as possible. Being dependent on credit cards or taking on too much debt can hamper your budget and become a financial burden. If you like this video and would like to see more like it, please give it a thumbs up, leave a comment, and click the subscribe button.